Among the businesses that were heavily impacted by the COVID pandemic included the film exhibition or the multiplex sector globally. The world's second largest cinema chain, Cineworld, lost 89% of its market value. In India, both PVR and Inox lost market cap by 59% and 60% respectively before seeing some recovery eventually. With the resumption of mobility and large-scale vaccination, people are again returning to their regular outings and cinemas are witnessing an improvement in footfall. Therefore, full recovery appears inevitable. The biggest beneficiary of COVID-led lockdown were the OTT platforms where films and TV series were released in the absence of multiplexes. Without a doubt, OTT consumption will continue rising. Nonetheless, consumption demand is different in both the cases and thus beyond initial cannibalizing. OTTs won't swallow multiplexes. Big budget movies require large distribution and screening to recoup the investments made by producers. Hence, box office releases are essential for a movie. Digital release, on the other hand, represents a much smaller source of revenue despite large subscriber base in some of the OTTs due to minuscule ARPU. For example, Bahubali 2 was released in 2017 to 6,500 screens in India and 2,500 screens overseas. On a budget of 250 crore rupees, the movie earned over 1,000 crores at the box office collection in the first 100 days, of which 500 crores was collected in the first week itself. Over 2 years of limited mobility forced people to venture out aggressively. Termed as revenge travel, this saw nearly full flights to all travel destinations across the country. Now regular outings are increasingly becoming normal and two major beneficiaries are going to be restaurants and cinemas. In the December quarter alone, footfall at PVR was at 1.45 crores, which is the highest since March 2020, but 30-35% below the pre-COVID period. Since December, the trend has picked up and should continue to grow rapidly. PVR is the largest cinema chain in India and has 866 screens across India and Sri Lanka. Over the years, it expanded its reach and entered different regional markets. A cinema chain typically makes money through multiple sources, which include the likes of ticket revenue, food and beverages sales, advertisement during the movie screening, and several others. Over 2015 to 2020, its average ticket price grew at a CAGR of 2.6%, spend per head by 8.4%, revenue by 18.2% and net profit by 16.4%. Pre-COVID, it maintained an EBITDA and PAT margin of 33% and 5% respectively. During the pandemic, the company rationalized its rent and other fixed costs, renegotiated contracts and further expanded the number of screens by 21 to 866. Multiple media reports indicate that PVR is in merger talks with Cinepolis. If completed, this merger with Cinepolis would add 471 screens to take the combined number to 1,331 and a joint market share of around 40%. This would mean that PVR would be 2x of the nearest competitor Inox in terms of screens. The size itself would help the company to pursue aggressive expansion to new locations. The pandemic forced a lot of producers to delay the release of their movies, which led to a large pipeline. The release of big budget films has begun and has seen a brisk business. A large pipeline of movies will ensure regular footfall to the cinemas for the entire year. Now, we forecast a large jump in revenue for PVR in the quarters to come as the audience return to cinemas. Our estimates suggest that PVR would still take one more year to return to pre-COVID margins, and perhaps that gets pushed to FY24. PVR is still trading 16% below pre-COVID price levels, and an increase in footfall should aid this recovery. Its premium positioning in a consolidating industry and probable move towards duopoly are net positive for the company. Arguably, at current levels, another 15 to 20% price rise would close the gap with the fair value of the company. Investors can take advantage of the current volatility to make an entry. Of course, there are some risks to watch as well. Volatility due to geopolitical tensions and Fed tapering and a large COVID wave again could dampen this growth trajectory that PVR seems to be on.